Hello friends, have you ever heard how traders make money in the cryptocurrency market without guessing whether the price will go up or down? Yes, this is called cryptocurrency arbitrage. And in this video, we'll break down different cryptocurrency arbitrage strategies from inter-exchange to spot plus futures and funding arbitration. Answer the main question. How much can you actually earn from this? If you're a beginner or have at least tried trading crypto, then this video is for you. So watch it till the end, give it a like and subscribe. Let's get started. Let's break down step by step what cryptocurrency arbitrage is and what risks are involved. First of all, let's start with the definition. Cryptocurrency arbitrage is buying a token at a lower price on one exchange, transferring it to another exchange and selling it at a higher price. For example, let's say Bitcoin costs 65,000 on the Bybit exchange, while on the Binance exchange it's 65,200. Accordingly, we buy this token on Bybit, transfer it to Binance, sell it there and make 200 bucks. The difference between the prices is our profit. But don't forget to deduct the commission. So in the end, we'll make about, just estimating, 100 to 150 bucks. That's after deducting commissions and all transaction transfer costs. That's why it's also important to take commissions into account. This is one of the risks in arbitrage. Arbitrage is very popular in the crypto market because price differences arise due to demand, liquidity, and platform-specific features. Sometimes, very strong arbitrage opportunities appear, for example, during hacks or when a token is being delisted. A token can drop sharply on one exchange, but on other exchanges it hasn't dropped yet, and you can capture that difference. That's why arbitrage will always be relevant. In a sideways market, in an uptrend, in a downtrend, there are always price differences you can take advantage of. Now let's take a closer look at all three types of arbitrage: inter-exchange, spot plus futures, and funding. Let's go, starting with inter-exchange. This is classic arbitrage where you buy a token cheaper on one exchange, transfer it to another and sell it there at a higher price. Let's say the Optimism token costs $2 on one exchange and $2.20 on another. Accordingly, you earn 20 cents per token. You buy it on the first exchange where it's cheaper, transfer it to the other exchange where it's more expensive, sell it there and pocket the 20-cent difference per token. So the more tokens you buy, the more you earn. Therefore, your earnings directly depend on your deposit. To engage in this type of arbitrage, you need accounts on several exchanges. You should choose the most popular top exchanges: Binance, Bybit, KuCoin, Main, XC, Gate, and various others. Create accounts there, complete KYC verification, and then you'll be able to engage in this type of arbitrage. To look for deals using this strategy, you can use different services, both free and paid. Among the free ones are CryptoRun and CoinMarketCap, and among the paid ones is Arbitrage Scanner, which automatically finds deals for you. You simply enter the required parameters and the deals are presented to you. It looks something like this. So you enter the necessary parameters, select the exchange where you want to do arbitrage, scroll down and you get a list of deals. It shows you the exchange where you need to buy, the exchange to which you need to transfer the token and sell it, as well as the profit you will earn. And all of this is automatic thanks to the Arbitrage Scanner. You can find such deals. The next type of arbitrage is called spot plus futures. It's a bit more complicated than inter-exchange arbitrage, but in principle beginners will still understand it. Let me explain now. The essence of this arbitrage is extremely simple. We have a token that is cheaper on the spot market, say on Bybit, and at the same time it is much more expensive on the futures market, for example on MEX. Let's take the XMR token for example. On Bybit it costs $270 on the spot market, while on MEXC spot it costs $300, and on MEXC futures it also costs $300. Accordingly, we have a price difference between the spot and the futures markets, and with the help of spot plus futures arbitrage, we can capture that difference. We buy the token where it's cheaper on the spot market, that is on Bybit, and on MEXC we start shorting it, because the futures price always tends to move toward the spot price due to various arbitrageurs, traders, and funding. That's why we'll make a profit when the prices converge. As soon as the prices start to converge, we can close our position. It's important to buy the token for the same amount. So if we buy $1,000 worth on the spot market, we should also short $1,000 worth. You can use leverage, but it will increase your risk, so you should pay attention to that as well. There's also a fee for opening and closing trades. Among the risks again is liquidation if the token suddenly spikes. But if you don't use leverage, the risk of liquidation is very low. Again, you are in a delta neutral position. You have both a spot position and a hedging short position on futures. That's why this is considered one of the least risky types of arbitrage, and it's very difficult to end up in the red here. Another risk is the possibility of the exchange being hacked. But again, the risk of an exchange being hacked exists in general whether you're trading on spot or anywhere else on futures. This risk is always present. For example, when the FTX exchange was hacked, it was considered a top exchange, but no one expected something like that to happen, and as a result people lost a lot of money there. That's why if we're engaged in arbitrage, we only keep the amount on the exchange that we're actually going to use. You can look for such deals, again using various scanners. For example, with an arbitrage scanner, you enter certain parameters here, you can open up more detailed settings and specify everything as you need. The strategy could be futures plus futures, futures plus spot, or spot plus futures. In this case, it's spot plus futures, and here deals will be generated for you automatically. You'll be shown the exchange where you need to buy the token, and the exchange where you'll be shorting. It also displays the funding rate and the profit you will earn. And the arbitrage scanner finds all of this for you automatically. You enter the necessary parameters, and it gives you a trade. You simply go to the exchanges, open the trade and earn a profit. And the third strategy for today is funding arbitrage. This is a more advanced strategy related to the futures markets. Funding refers to the fees that traders pay for holding long or short positions. If the funding rate is positive, longs pay shorts. Accordingly, you can open a short position and earn money because there are a lot of people holding long positions and they will be paying you commissions. To maintain a delta neutral position, you can open a short on another exchange or buy the same token on spot. Usually funding is paid out every 8 hours, but sometimes it happens less frequent every 4 or every 2 hours. It all depends on the market volatility. You could even say this is passive income, since you open a futures position and simply wait for the funding to be credited. You're not guessing whether the price will go up or down. You earn from the funding payments. You can check the funding rates absolutely free on the Arbitrage Scanner exchange. Go to the funding rates tab and you'll see the funding rates across different exchanges. It shows the token and the maximum spread between the funding rates. Accordingly, you can capture this spread. You find an exchange where, for example, the funding is positive on one and negative on another. So what do we do next? On the exchange where the funding is negative, we open a long position because short sellers pay long holders. Where the funding is positive, we open a short position and earn from the short. This way, you can profit from funding rate arbitrage. Sometimes it happens that the funding is negative on both exchanges. Accordingly, you can profit from the difference between the negative funding rates. Look, on the CoinEx exchange, the funding rate is minus 0.0265, while on Bybit it's minus 0.00462. So, since the funding on CoinEx is more negative, we go long there. We will earn the commissions paid by the short sellers, and on the Bybit exchange, we will go short. Since the funding is negative, we will pay a small fee. But thanks to the difference between the funding rates, we will make a profit. And again, you need to enter with the same amount on both sides. That is, if you short for $1,000, you should also go long for $1,000 to maintain this neutral position. Our goal here is to collect the funding, which is shown at the top of the exchange and indicates when it will be deducted. On the Bybit exchange, the funding is displayed here. We can see that it is negative, and we can also see the deduction time, how many hours or minutes are left until it is deducted. And now let's answer the main question. How much can you earn from cryptocurrency arbitrage? I will say right away that earnings will depend on your capital, activity and perseverance. In inter-exchange arbitrage, the yield here is often in the region of 0.1-1% after paying the commission. Accordingly, with a capital of $10,000, if you make 10 transactions with a yield of 0.5, you will earn $500 per day. Spot plus futures arbitrage. Here the yield is already higher, and on average it is 1 to 3% per transaction after commissions. Accordingly, with $1,000 and 5 transactions a day at a yield of 2%, you will earn $100 per day. For beginners with a small capital, this is one of the most profitable cryptocurrency arbitrage strategies, because it is also considered one of the least risky. Funding arbitrage. Here the average return is 0.001-0.1% over 8 hours. With $10,000 and an average funding rate of 0.05, you will earn $45 a day. Accordingly, this will be $1,350 per month. Accordingly, this is one of the laziest and most passive strategies, since you just wait for the funding process, collect the funding and close the trade. I've broken down the average return. Again, everything depends on your capital, on commissions and on what trades you will be opening. If you're a beginner, you shouldn't expect super high returns right away. You need to practice with small amounts first, and only then start making trades with larger sums. The average monthly return for crypto arbitrage is 5 to 10%. This is a normal, not exaggerated, typical return for crypto arbitrage. What risks can there be here? The first is transfer delays. While you were transferring a token from one exchange to another, the price may have changed, so you might end up selling at a loss. There are also risks of account blocks, but honestly, neither I nor my friends have ever experienced this, and I hope you never do either, and that a scenario like what happened with the FTX exchange never repeats itself. This is a risk you should also take into account. That's why we only keep the funds we're actively using on the exchange. And then there are the fees. You pay fees for opening and closing trades as well as for transfers, so you need to factor those in as well. Now, how do you start arbitrage in 2025? First, you need accounts on several exchanges. Choose several popular exchanges: OKX, Bybit, Binance, CoinMax. On these platforms, you'll be able to find arbitrage opportunities and make a profit. Use the scanners like an arbitrage scanner, which will automatically find deals for you. Start with a small amount of capital, test arbitrage with $100 to $500. There's no need to jump in right away with $10 or $5,000. Test it out with a small amount. If you're doing well and consistently earning $2 or $3 a day, then you can increase your investment and boost your earnings. And it's important to keep track of your trades. Keep spreadsheets where you record each trade. The opening and closing of positions, how many tokens you acquired, and what profit you made. This way, you'll be able to optimize your strategies and earn much more in the future. Study the market and keep up with the news. Also, watch educational videos, including those on our channel where we talk about crypto arbitrage and show real cases where we make money. And most importantly, remember that arbitrage is not a get-rich-quick button. It's a job that requires analysis and discipline. So, in this video, we covered 3 strategies: inter-exchange, spot plus futures, and funding arbitrage. You can try each strategy, and whichever one you like the most, you can start exploring it and studying it in more depth. We've learned that a real return of 5 to 10% per month is a normal yield in crypto arbitrage. If you found this video helpful, leave a comment and let us know if you've tried arbitrage. Give this video a like and subscribe because we talk about crypto arbitrage. Check out other videos on our channel and we'll see you in the next videos. Bye everyone.